Hello, I'm Hunsley of Livewire Markets, and welcome to the first of our interviews with the leaders of corporate Australia during this August reporting season. And I am delighted to say that we are kicking off with Steve Johnston, the Chief Executive of Suncorp Group. Mr. Johnston, welcome to you. Thanks for joining us.
Nice to see you, Hans.
Let's get straight into it, sir. What are some of the key figures, the key numbers in this earnings report that investors should be aware of?
I think the headline numbers, net profit after tax just under 1.2 billion, cash earnings just under 1.4 billion, dividend, second half dividend 44 cents per share, which is a 72% payout ratio. Good growth across all of our portfolios, starting to moderate as inflation starts to moderate, but the most important metric is the underlying insurance trading ratio, which is the metric everyone looks at, the underlying performance of an insurance business, and that reached the 12% mark in the second half, which is what we flagged.
Well, I was listening in on the analyst call this morning, and two themes really kept coming up, pricing power and margins. And I ask you, how much pricing power will Suncorp be able to retain over the next 6 to 12 months?
I don't look at it so much as pricing power. I think, we've obviously had to respond to inflation like all other insurers. It's a competitive market, particularly on the home and motor products. So we've been putting through pricing that reflects the input costs. In Australia, we've had this once-in-a-generation reset of reinsurance costs. Reinsurers have looked at Australia and New Zealand differently over the past 3 years, and that's had to unfortunately flow through to increase premiums for our customers. Put that and inflation together, and those increases have been quite steep. So we are no different to any other insurer. We're playing in the same market. We're dealing with the same global insurers. So I think it's a matter of continuing to be competitive and focus on improving the way we manage claims.
I was going to say, can you just unpack, for maybe people who aren't aware, can you just unpack that reset over the last few years? What has that been like for you guys at the coalface?
Yeah, well, maybe 10 years ago, global reinsurers who really underpin the Australian insurance market because they support us, they insure us in effect as a primary insurer. They used to put their capital into Australia and New Zealand to get what they call a diversification benefit because Australia and New Zealand risk is different to Europe and Asia and the US. They didn't spend a huge amount of time modelling the perils. And of course, Australia is, rich with perils, whether that be bushfire, flooding, hail, cyclones, etc. And so over time, they lost a reasonable amount of money in Australia and New Zealand, and they've obviously had a reset around the way they price and improved their modelling. So that's meant more cost in terms of what we call the rate online of insurance, reinsurance for us as a primary insurer, and more capital that we've had to hold as they adjust their risk appetite for where they attach their programs in these geographies. So there's a twofold effect.
Yeah, okay, understood. So one thing I also found interesting just reading through the report, part of Suncorp's business involves earning income from investments. So I'm curious, how are you thinking about this given we're seeing markets near all-time highs and the next move for interest rates is likely down?
Yeah, well, obviously, in the last little while, we've had a good tailwind from high yields in our portfolio. We also bought, probably 10 years ago, some inflation-linked bonds, some linkers in our portfolio. They've served us incredibly well through a period of high inflation. But obviously, as inflation comes off, they don't tend to deliver the way they did when inflation was high. But as the yield curve starts to unwind, that's obviously a headwind for us in terms of the returns we get from those portfolios. So what it means is we've got to double down and focus in on our underwriting. We have to improve the way we select risk and the way we manage claims. And as an insurance company, be as efficient as we can be. If we get all those three things right, then we offset any of the headwinds that come from lower yields in our investment portfolio.
One of the key measures you mentioned at that top question there, the dividend payout ratio, notice it was 72% for fiscal 2024. What figure can investors expect, do you think, for fiscal 25?
Yeah, well, we are an insurance company, so our profits do move around relative to investment market volatility and weather. So we have a payout ratio view of our dividends. So typically we have a range of 60 to 80% of our cash earnings. So we get our cash earnings and then we pay out somewhere in that range. What I've said today is that we're going to try and be disciplined around landing at 70% for the full year consistently. Any excess capital that we generate by paying out at that payout ratio, we'll put into a perpetual buyback facility and we'll drop those shares back to our shareholders through a buyback continually over time.
Okay. So, of course, those are to do with the actual earnings today, but of course Suncorp has recently completed the sale of its consumer and business bank to ANZ for $4.1 billion. As I understand, I think it's the biggest merger in this space since CBA bought Bankwest in 2008. So for you as the chief executive and as somebody who's been through this entire process, start to finish, really, Why was this deal the best long-term outcome for shareholders?
Yeah, look, I think there's been an open question around Suncorp's ownership of the bank and an insurance company under the one roof. The conglomerate model, the all finance model, various other incarnations of those models around the world have never proven to be successful. It was an open question. I didn't wake up one morning and say, I'm going to sell the bank. I woke up one morning and said, we've got to resolve this question one way or the other. So we set about improving the performance of the bank, seeing if there was a process that we could embark upon that made sense for shareholders, customers, Queensland, the national economy in selling or divesting the bank. We were able to make that work. It took 2 years. It was incredibly complex. But fundamentally, the strategic rationale is that I don't have to wake up one morning and thinking about whether I'm going to deploy $1 of capital into a bank or $1 of capital into an insurance company. I can now focus, and the team can now focus exclusively on improving the quality of this great insurance business so that we can be a regional and a global leader.
Yeah, no, absolutely. And you've also flagged today, you were just talking about the buyback program, but you've also flagged that any additional shareholder returns to come from the sale of this business will arrive by the first quarter of 2025. I'm curious, do you have any concrete sense of what that return will look like and how much of that $4 billion plus figure will be returned to shareholders?
Well, we're targeted on getting the majority of that back to shareholders. In fact, we'd like to get the whole of it back to shareholders, the whole 4.1, and that would be in the form of a share consolidation, capital return and a special dividend. We've got a few steps to go through. We've got to consolidate the final completion accounts with ANZ. We've got to get Australian Tax Office approval, APRA approval, which is the regulator, and obviously shareholder approval. That'll take us a bit of time, but our starting point, as it's always been whenever we've divested a business, is get the majority of the proceeds back to shareholders. Excellent.
So what I'm hearing from this is that buybacks and special dividends are both not just on the horizon, they're actually both definitely on the table.
Well, we'll do a capital return, share consolidation, we'll do a special dividend, and we'll do buybacks. So we've got everything covered.
All of the above, fantastic. As you've said also, this move would, or you want this move to make you a better insurer, a more focused insurer, I think I've heard you say. So what metrics will you look at to determine if this ends up being the case?
Well, I think one of the key metrics is that we're delivering to our purpose and building futures and protecting what matters. I see too many Australians that are impacted by flooding and fires and bushfires and all sorts of different perils. You know, if we can step in and we can make insurance affordable, we can, improve the availability of insurance generally across all of our customers and into the economy, I think that's ultimate measure of success. There's plenty of financial and customer measures that we can turn to, but I think just improving availability and affordability of insurance for mum and dad Australians is a fantastic outcome if we're able to achieve it.
Yeah, absolutely. Mr. Johnston, one last question, if I may. You talked earlier about waking up one morning and having that moment of realising, right, we've got to solve this issue of how we turn two businesses into one. So that's what kept you up at night then. May I ask, what might keep you up at night in the next fiscal year?
Well, when you work in an insurance company or you lead an insurance company, there's always something to keep you awake at night, whether it be volatile markets offshore, because we deal into them, or whether it be the weather forecast. I spend a lot of time looking at the weather radar, and I can tell you what, when I see some of those big clouds start to hit the horizon, some bushfires or floods or downpours coming, that's enough to keep me awake at night. So there's plenty of things to worry about in insurance always.
Steve Johnston, Chief Executive of Suncorp Group, thank you very much for joining us. Really appreciate it.
Thank you.
And I hope we get to chat again soon as well. And thank you for being with us. Remember, you can catch more of Livewire's reporting season coverage at livewiremarkets.com, and you can also subscribe to our YouTube channel as well. Thanks for watching.